It's vital when you're trading any instrument that you maximize the profit potential when you take your trade. And you can increase your profits when you're trading options if you consider two simple steps that I'm going to talk about. But I want to ask you a question first. Have you ever been stuck in front of the computer screen on your weekend? It's scanning through thousands of stocks, and you're looking for the best candidates to trade the following week? And if you answered yes, has your mind ever just started to wander off to other things that you'd rather be doing? And if yes, then join the club. See, you and I and everybody else, we're not really different. And I think we've all found ourselves in that situation. And it can be easy to get stuck into this scenario, as there are many programs out there teaching this approach. You grab a cup of coffee, you fire up your trading charts, you scan through the full universe of stocks looking for a certain price pattern, and you make a note of the stock that you're going to follow for the next week. So in my experience, and probably yours as well, this can lead to a number of problems that you really want to avoid. And not only does scanning thousands of stocks on a regular basis take a lot of time, it can also lead to common mistakes, especially when you're trading options. Look, in many cases, stock scans, they run looking for certain price patterns on the charts. While this can lead to the discovery of some really good-looking charts, it does not necessarily make that product a good one to trade when you're looking at options. And if you're going to be trading options, then you need to pay attention to more than just price patterns. And one of the most overlooked areas of the market by traders is the liquidity in the products that we're trading. And this is especially true in the current market environment. And it doesn't matter how great the chart pattern looks. If there isn't any volume and open interest if trading options in those products, then you're going to find it very difficult to get in and out of the trades quickly and at the prices that you want. You may find yourself adjusting the price of your orders a few times to get filled. And while this doesn't seem like a big deal to just, by a few pennies, it can really add up to a big number over a whole series of trades. For example, if you're trading options and you find that over time you got to adjust your price by 5 to 10 cents on every single trade to get in and out, that's going to lead to a huge cost at the end of the year. So let's say you place 100 trades over the course of this 1 year, and with each of those trades, you're using 10 options contracts. And if you have to adjust the price of your order by 5 cents on every single trade in order to get filled because of the lack of liquidity, you're giving up $5,000 right there just on trade costs alone. Now, 5 cents does not seem like a big deal on one trade, but when you do the math over dozens of trades, it can be a huge loss long term. And even if you play around the numbers on the example and you take only each trade with one contract, you're still losing out on $500 over the course of 100 trades if you can't get filled at good prices. Now, I realize that you may not have to give up 5 cents on every single trade that you've taken throughout the year, but you do the math and you can see that can really add up over time. So what can you do to remedy this situation? Well, instead of scanning thousands of stocks on a regular basis, simplify things and narrow down the universe of stocks to a manageable number. For example, at Netpicks, our universe of stocks that we look at is 40 to 45 names. And outside of those names, we don't really care what's going on in other areas of the market. So this allows us to get to know the names on the list really, really well and make sure that they're liquid products. It also cuts back on the amount of research time that's required to stay active in the markets. Who really has hours to spend every single weekend researching which products you'll be trading the following week? And I don't think that any of us really want to have that burden on a weekly basis. Now, since the names on our list rarely change, we can gain really great experience with our small watch list of products. And if you're looking for a good starting point to work with, I've also included here a link to a free options trading ebook that we produced at Netpicks. And that includes our hot list of stocks that we like to trade on a regular basis. And the key to creating a watch list of stocks or ETFs is to make sure you're using a diversified list of products. So we want a mix of stocks and ETFs along with a mix of different sectors as well. Because the more diversification you have on your list, the better your results are going to be long term. And we walk through this process in more detail in that free ebook. So how do we check to make sure the products we're trading are liquid enough so we're able to get in and out of the trades quickly and at good prices? Well, since we trade options, you look at the liquidity of the option, not the shares of the stock. When looking at the options on a specific stock or an ETF, we want to see good volume and open interest spread across multiple different strike prices. Seeing good volume on one strike price is not enough, as it most likely indicates a few big institutional trades that have gone through. So make sure you're seeing the volume and the open interest spread across multiple different strikes, as we see right here. And this chart, it's of the SPY, which is the S&P 500 ETF. And it also happens to be one of the most liquid products in the world. And you can clearly see there's good liquidity. It's spread across numerous different strike prices. So this is going to make it much easier for us to get in and out of the trades quickly and at good prices. Now compare that to this picture of STAG, where you can see there's nowhere near the volume and open interest as we see on SPY. What open interest there is on STAG isn't spread across many strike prices like we saw earlier. Now, this is a name that we may have a great looking chart pattern and perhaps strong price action, but it's probably going to be difficult to trade because of the lack of liquidity in the options. So this is a product that we would just stay away from. So the rule of thumb is you typically want to see open interest on the option you're looking to trade of at least 50 times the number of contracts that you're looking to trade. So if you're looking to trade 10 contracts, you want to see the open interest of at least 500 contracts. You also like to look at good daily volume on the contract as well. But that's not as crucial as volume can vary depending on the time of day that you're placing your trade. So it may not seem like a big deal if you're just starting to trade 1 to 5 contracts to focus on so much attention on the liquidity numbers of the option. In fact, you probably won't have a difficult time in many cases getting filled on smaller trades. However, your goal should be to grow your trading account size over time so you can increase the size of your trades. With this being the case, it's crucial to establish good habits right now. This way, when you go from trading your 1 contract on your trades to 10 contracts, you'll already be programmed to look for the good liquidity. And this is a lesson that most traders have to learn the hard way. And I know that many of us at Netpicks have had that same issue. And there's nothing worse than getting into a position and not being able to get out without having to adjust your price multiple times. And as we showed earlier, this can lead to some pretty large trade costs over time. So as traders, we want to maximize our returns. So any little tweak that we can make to our trading that's going to increase our profitability long term is worth the effort. Establishing a watch list of products that will take some work initially, as you're going to need to research and really get to know those names. However, since that list of products does not change very often, you're going to be able to start having a track record of trades that you can learn from. Long term, this will actually save you time and lead to better results. So take that time right now to focus on liquidity, and it's probably going to lead to better returns in the long run. And don't forget to download your 6 tips to winning options.